Welcome to episode 2 of Builders, Budgets, and Beers. I'm your host, Reece Barnes, and if you're a builder looking to better understand work in progress reporting, commonly referred to as WIP, and how to leverage it in your business, then this episode is for you. We'll be discussing WIP on a simplified level, the 3 main reasons why you do WIP, and how a builder that actually works with our guest, Zack Kelly, was able to drive home an 8-figure profit. That's right, PROFIT, by successfully leveraging WIP and healthy accounting practices in their construction company. Let's go ahead and jump in. And today we have our industry expert, Zack Kelly. Zack, go ahead and give us a little introduction.
Hey, I'm Zack Kelly. I'm founder of Home Builders Financial Partners. We are a construction-specific bookkeeping and accounting firm. We tailor to the high-end luxury market of custom home builders. That's what we do.
Love it. Love it. How did you get into this, Zack? Were you always how'd you get into this?
That's a great question. Been in construction, as a kid. Stepdad was a builder, swept out houses, framed houses, exterior trim, you name it. We kind of did it as a kid.
Yeah.
Swore I would never be in construction ever. Here we sit. Like a lot of us, construction finds us. We don't necessarily find it. Start my career, I was in high-end wealth management, helped rich people, manage their money, pay less in taxes. And one of my real good friends that fell in that category was actually a builder and just asked me to sit in on a meeting, try to reorganize his business with a software solution he thought was going to solve all of his problems. The amazing thing is, like most softwares, they actually don't solve our problems, especially if we're not understanding what our problems currently are. So By the end of that meeting, we had addressed some problems that Steve had in his business. And I just told him we needed somebody to implement these changes. He looked me at the face and he said, "I found my guy. You're it."
Love it.
I've been his CFO for the last 13 years. And that's pretty much how it started, just by happenstance. Just a good buddy of mine needed a little help. He didn't really exactly know how to get where he wanted to go, but knew where he wanted to go. Fortunately, I was the guy that knew how to get him there.
That's awesome. That's a great, this story is so consistent of family member construction, didn't want to do construction, took another path, found the way back into construction. It's interesting how consistent that is. But that's a great story. Just kind of moving from the wealth management side into more of a CFO level service. I mean, that was 13 years ago, and you just decided to build a business around it because you liked it, because you had a need for it. Why did you decide to double down on it instead of just working with this guy?
Yeah, so wealth management led into just kind of being an outsourced CFO for Steve, and I owned an Allstate insurance agency and was actually selling a life insurance policy to a referral. Started just doing the traditional life insurance kind of, what do you do for a living? How much money do you make? And I meet a builder, happened to be building in the same market as Steve, and we talked a little bit about what I did for Steve. And anyway, I deliver his life insurance policy, and he asked me to just sit down and have a cocktail because he had something to run by me. And so we sat down, and he asked me, he says, "I see that you run all these books for Steve and you're outsourced CFO, kind of handle his accounting. Is there any chance you could do that for me?" And I said, "Why not?" So I started working for Ben and those guys. About a couple months later, they had an old partner that handled the finances. Both of these other partners were builders. They hated the office. So I started working with them, really solved a cash flow problem that they had in their business. And that was my second client. Came about 3 or 4 years after starting to work with Steve. And again, had all these other businesses, really focused on that. Well, I used to meet Steve and Ben in my office every week, separately, of course, but we'd go over their finances. Well, COVID comes around and I don't see those guys for a year, right? So now they're not coming to my office. We're having phone calls, Zooms, whatever, like the world existed during COVID. And I thought to myself, well, I could keep going down the insurance path trying to grow that, but I have very big limitations on that. I couldn't decide who I could sell to. I couldn't decide how much money I was going to make. I couldn't help people how I wanted to help people. So I said, you know what, this CFO financial consulting that I do for builders could be a super helpful thing for guys that really don't enjoy that part of the business. So in late 2020, I decided to expand nationwide, and we opened up other markets. And By the end of 2021, we had about 20 clients in about 13 states. It's been a lot of fun. We really get to help people. We get to help builders do what they don't like to do, what they're really not unsure about. A lot of these guys know it and they understand it. They just don't have time to do it, right? This doesn't make them money. What makes them money is building houses, selling houses. And so with our systems, we allow them to do that, allow them to be more efficient because the back office is taken care of and they don't have to train anybody, right? We know what we're doing every single day. So that's kind of how we got here.
Yeah, no, I love it. And I think even like with the theme of builders, budgets, and beers, just to, as a reminder, if people haven't been following along on every episode, the entire intention of this podcast is to make project financials less scary, right? We wanted to bring in guests, contractors, builders, industry experts that could have honest, vulnerable, open conversations so that then people can identify with it and say, everyone struggles with this stuff. Builders don't like handling their financials. They want to focus on the other stuff, but we want to drop that barrier. So I think this is going to be a really good episode, massively applicable. Matt, do you want to hit the questions? Do you want me to open up?
Yeah. Yeah, sure. So today we're going to be talking about WIP, right? Many people I'm sure have heard of WIP, though I'm not sure everyone understands it, to Reece's point, right? So WIP is kind of a scary acronym that not a lot of people understand. I think
is that Zack the Devo song? WIP? Is that Devo? Whip it good?
I was thinking Matt was into some weird kind of other stuff with whips and things.
Yeah. What is WIP? What like WHIP, like the cream cheese, like whipped cream cheese?
Yeah. It's WHIP. It's work home in progress. Yeah, work
home in progress. Yeah. What is WIP for the listeners?
Yeah. Zach, tell us what WIP is.
It's work in progress. It's what you're doing on your jobs, how far complete you are, and based to your estimate.
And why is it important for construction companies to track?
Well, a lot of construction companies, especially construction companies over $5 million, report income by work in progress. They don't actually report income by when they receive it. They actually record income by the work in progress that is completed per job. So it's super important to understand that this is actually how you're taxed. This is how you realize income on your financial statement.
Okay. So this is for builders over 5 million revenue is when this is required by the IRS. Is that correct?
That's correct.
Oh,
yeah.
Interesting. Go ahead. Sorry, no, I didn't mean to throw it off. Go ahead.
No, that's fine. And I have builders of all sizes that use WIP because it's an important tool, but you don't have to necessarily do it until you get to a certain size. Like Matt said, $5 million and up is really where the IRS says, look, we want to employ this. We want to see how this is working for you.
Gotcha. So it really is. It's an IRS requirement that at 5 million and above, you have to do WIP.
You don't actually have to do it at 5 million and above. It's recommended at that level. When you get to a certain level, which is $30 million, it is absolutely required. The biggest thing with the IRS, they want consistency, right? So
right,
as long as you do things the same way year over year, the IRS is going to be fine with it. The biggest thing is once you get to a certain point, they don't care. They always care about the consistency, but you have to do it at one point. So most builders that get to 5 million, they go ahead and adapt this strategy. One, it's usually the accountant's method that's recommended. Again, because you don't know where that scale is going to end up taking you. But the IRS and accountants see when you get to 5 million, there's a good probability you're going to get much over that required threshold at some point.
Got it.
Is WIP? Go ahead, Matt. Go ahead.
Well, I was just going to clarify one other point. And the other piece here of when WIP is used is if you're using percentage completion accounting, right? Not if you're using completed contract method.
Bang.
That is correct.
Can you talk just a little bit about those differences? Yeah, between those.
Sure. So completed cost contracting means you don't receive income or your cost until the project is actually finished. So let's say you have an 18-month long project, it's $4 million. You won't receive that $4 million of income until the project is actually finished. So you're also going to report that $4 million of income and the construction costs that go with it in the year that it is completed, not throughout the life of the project. WIP, on the other hand, you have that same $4 million project, takes 18 months to do. You are realizing the income and the cost based on the percentage of that it is completed in that month or the work in progress. So you realize that income and cost throughout the project instead of waiting till the end of the project to receive the income and cost.
And how do you decide whether to use which of those two methods?
That's a great question. Again, it's usually a meeting with your accountant that kind of decides what you want to do. Lots of guys usually when they start their companies, they've come from somewhere else, right? And like a client that I have this year that just started a brand new construction company doing big projects. He wanted to do completed cost construction because that's what he was used to. That's what his firms have always used in the past. I don't know if there's actually a scientific method of why somebody uses one over the other, but usually it's accountant driven or past experience. That's what I've seen in the clients that I have.
Got it. Okay, cool. Okay, so WIP recommended over 5 million, required over 30 million, required only if you're doing percentage completion accounting. Anything else there?
No, that's pretty much it.
All right, cool. So let's talk about what WIP is. What's actually in a WIP report? What are the key components of it?
You've got your contract amount, estimated cost to date, the percentage of the job that is actually complete. We usually throw a profit to date in there so you can see where things are, the amount earned, billed to date, and then cost to complete. Those are really your key components that kind of show you where everything is. Again, it's super complicated, but we're going to dumb it down here and make sure everybody understands what we're talking about. Yeah,
it's super complicated, but it's really not, right? At the end of the day, ultimately, it's a measure of how much have I spent, how much have I collected, how much should have I collected is basically what you're trying to figure out, right? How much income have I earned on this project? Okay.
And
Go
even
ahead,
just so like when I explain it, it's what did I expect this to cost? What did it actually cost? What did I expect to make? What have I actually made? Is it really those 4 pieces? Yeah.
Pretty much.
Yeah. And then the key piece there is what have I actually made, Reece? Right? Yeah. Are you measuring that based on what you've collected or what you've actually earned? Because that's what WIP is ultimately trying to zero in on.
Right. So that you're not, and then correct me if I'm wrong, certainly correct me if I'm wrong. But because even in like, let's just say a scenario where you are pulling draws, it's not like a percent complete, like a fixed price guy, or it's not like it's a cost plus guy. I could have $500,000 in draws, but I can only have $250,000 in costs so far. Right. So I'm cash heavy. But the entire concept of WIP is that you're not getting taxed on that $500,000 until that cost is actually complete and you've actually used and performed that work. Fair?
Fair enough.
Correct.
Beautiful.
But I think yes, correct. That might be getting a little advanced. So why don't we unpack that piece a little bit? So Zach, first we're talking about earned revenue, right? That's how much you've actually earned on the project. How is that determined, right? Talk about the percentage complete calculation and then how you use that to figure out how much you've earned.
Sure. So let's just take $1 million project, kind of keep math simple, right? So let's say we got $1 million project. Today, I have received $250,000 of cost on my $1 million estimated project, right? So we can all agree that's 25%, correct? So so what we're going to do at that point is we're going to take our estimated contract price. So let's say that's 1.5 million. Okay. So at the end of the day, we're 25%. So our income that we should have received at that point is 25% of $1.5 million. So that's how it's calculated. So at that point, you're 375, I think. I think my math is right. So that's how much money you should have completed. That's how much money you have earned at this point. Now it actually doesn't account for on this metric right here what you have completed. That comes into the next step. So let's just say, for example, same project, $100,000, we're $250 of cost, $1.5 million contract. Again, we should have received $325, but let's say we received $500,000. That $500,000 tells you that you're $175,000 overbilled. That means you received $175,000 more than you should have received today. Not a problem. That's actually where we like our clients to live. My biggest thing in this world is we're building custom homes for the most part for other clients. You shouldn't use your money to build somebody else's home. So we always want to make sure, in the best case scenario, that we're overbilled, not underbilled. So same scenario, let's kind of talk about underbilling and where the concern comes from that. So same project, $1 million, you have $250,000 complete. You should have billed, you've received $325,000 is what it's expected. But let's just say, for example, you've only received 300 grand. So you received 300 grand on this project. You are now $25,000 underbilled. And what that's telling us is we haven't billed the client enough. You are now using your money or your company's money to build this project for folks. That's where it's important to look at this report on a monthly basis. Is our big thing with our clients is you got to look at WIP on a monthly basis. If your financials are done correctly, they should be done anyway, because that's how you're going to close out a month. But what most of our builders sometimes struggle with is actually looking at it and trying to understand where they are. So underbillings is what we want to make sure we catch up on. Sometimes it's just a natural thing that's going to happen. You get more cost in a month than you were expecting. You couldn't really draw for it at the beginning of the month. So what we sometimes see is at that end of the month, yes, you were underbilled, but we are going to bill the very next week to get you caught back up. So we make sure that you're actually not financing the draw for your client. That makes sense?
Yeah. Yeah, it makes total sense. So that kind of brings us back to, why is WIP important for construction companies, right? I think there's two primary points. There's the first point you discussed earlier, which is making sure your income statement's actually accurate for the IRS, which maybe is less pressing, maybe less important to the average customer. They're not necessarily thinking about that as much. The second piece, which is really important, is managing your cash flow, right? So WIP is kind of a guide to make sure you're managing your cash flow appropriately. Is that correct?
That's 100% right. And, it's the biggest factor. Again, I don't want you using your money to build somebody else's house. It just makes no sense, right? And if you're on top of this, you're going to always understand that you're not doing that. It's a big component, man. 100%. Most people aren't really worried about their income statement being right until, the end of the year, or come, March 15th every year. That's when everybody's, oh my God, I gotta update my income statement. Is it really right? Yeah. But what you really want to do is make sure that you are following along, so you're billing your client appropriately to make sure they're paying for their house. Big component of ours is bill every month. I just did a presentation for a Builder 20 group this week, and we were talking about this. How do you manage cash flow? Bill every month. I set up your draw schedule so it's a monthly draw. That's going to help those underbillings go away, or at least limit them to the max.
Yeah. I think we should talk a little bit more about this over and under billings thing.
Sure.
That one we dove right into a little bit. So you gave some good math there. Good mental math by Zack. I wasn't sure the 375. You got it right. But yeah, just to recap what you said, right? The whole point of WIP is figuring out what percentage complete am I on this project. Okay, take that percentage, multiply it by the contract price, subtract what I've already billed. That's how much you should be billing for, basically. Okay. And so to recap how you calculated that, you gave the example of, I got a $1.5 million contract with my client. I actually expect it's going to cost $1 million. I have spent $250,000. I'm 25% complete. Okay. I take that 25%, I multiply it by 1.5. I've earned $375,000. If this is the first draw, your draw should be $375,000. If you aren't working with Zack and you're just going willy-nilly and you bill for $500,000, then you are $125,000 overbilled, right? $500,000 minus $375,000. If you aren't working with Zack and you are underbilling, you billed $300,000, you're $75,000 behind. Okay. So hopefully that math was simple enough. Was that simple enough, Reece? Is that good?
Yeah. I mean, I'm a journalism major. I chose my degree so I didn't have to take math. Yeah. But yeah, no, it resonates. Yeah, I get it. So I guess why wouldn't you just always be overbilled?
Zack, why don't you talk about that?
Why not just stay overbilled?
That's a great question. Well, sometimes we might work with banks, and banks aren't going to let you get too far ahead, right? So it's based on what the bank's going to do. That's one thing. That sometimes happens. Other thing, like I said, there's certain instances where you've billed early in the month, you're in a good spot, but you got a window package dropped, right? So window package might be $150,000. Well, as you close that month out, that cost is going to go against that WIP, right? So now I've got $150,000 more of cost that I didn't know about at the beginning of the month that wasn't complete, so I couldn't bill for it. So therefore, now when I close my month out, I am going to be drastically underbilled in this situation, right? So there's lots of things that sometimes you just don't know are going to happen, or a bank's not going to fund it. There's multiple reasons why, but usually the biggest thing that we see is just unexpected cost. The other thing that often happens to get people underbilled is they're not billing their client frequently enough. They're waiting too long. They've maybe set up their draw schedule to be based on certain levels of construction being complete. Now, I also find this is a huge problem in the industry is we're going to bill based on a schedule of when things are complete. Foundation's done, I'm going to build. Framing's done. Roof is put on. You name it. They have all these stages that they're going to get to. Lots of times they also put in inspections as a process of when those items are actually complete. Well, if we're waiting on an inspection to come, that doesn't mean that our rough ends aren't happening. Other things aren't happening that are still waiting for some sheathing to be adjusted, other things. So you're getting all those bills to come in that causes you to be underbilled because, again, you set these milestones on when you're going to bill. Again, that's our big thing, bill frequently. I'll tell you what, your client is going to like it a lot more if they know the schedule is, I'm going to get a bill once a month, as opposed to they get these large draws and they don't see anything for a couple of months. So anyway, that's the unexpected cost, not billing frequently enough are the two reasons we see most clients that are underbilled.
And then that's where even the difficult part is the unexpected costs, right? Obviously the bank's not going to overbill you and you're not going to get away with that from the bank. But understanding your cost in real time is a big component of being able to forecast. Okay, I might have had heavier unexpected costs, but if I'm taking all of these principles into consideration, I can square up on my monthly draw. So it's really, that's where all of this kind of comes together of the estimate versus actual, and then the revenue, how are we drawing, and seeing all that information in real time is a very critical component of this, considering the unexpected circumstance.
That's the biggest component, Reece. You 100% hit it, and that's why I don't force, but I try and force our clients to look at their actual versus estimate at least on a weekly basis. You're going to get, as I tell everybody, you get invoices as a contractor 365 days a year. Every single day, you're going to get an invoice from somebody. And people are like, you don't get an invoice on Christmas. Yes, you do. You get an invoice every single day. The biggest thing is, so why don't capture those costs on a weekly basis, then evaluate where you are actual versus estimate. Then if you have your project manager, whoever's running the job, provide those schedules and updates for you so you know what's coming, what's to be expected. Yes, I agree. Bill every month, bill on a schedule, bill where you know what you're doing. However, if you know your project manager is expecting a window package next week and that invoice is going to come a week after you bill, I might want to wait until those windows are actually delivered to actually bill. But again, back to your point, that's understanding where you are, actuals versus estimates, and really staying in front of that curve instead of behind.
Got it. So in that circumstance, the idea of waiting to draw, knowing that I've got a large invoice for a window pack coming in a week later, is that it's worth it to push your draw, say, a week than it is to know that cost is coming in and then hit it on the following month's draw.
I think so. In my experience, I'm always going to want to, I'm willing to wait a week for especially a large thing like a window package, cabinet draw, something like that. That really is going to impact my financials and my cash flow. Again, we employ lots of processes to kind of help that cash flow, even if we don't get that draw included in our draw request, that invoice in our draw request. But it's always, if you know what's coming, it's easier to wait a week.
Yeah. Got it.
Love it.
Okay. I think the point Reece brought up, as well as something you said, Zach, is another really important point to discuss. So you, Zach, spoke about the downfalls of tying your draws to inspections and when certain things are physically complete on the job site. And then Reece talked about the importance of making sure the projected cost to complete is correct. I think just tying those two together, right? Because we've talked about percentage completion being best calculated as cost to date divided by projected costs, right? Total expected costs on the project.
Yep.
What does that rely on? It relies on total expected costs to actually be accurate, right? Because in the example you gave earlier, if you're $250,000 through and your estimated cost is 1 million, but actually it's ballooning to 2 million, you're not 25% complete, you're 12.5% complete. And then you're going to run out of money later in the project. So why don't you talk a little bit about this piece, Zach?
That's 100% right. You've got to have your projected cost accurate every single month to really give your WIP meaning. You're 100% right, Matt. If you're originally estimated a job at $1 million and it's going to end up at 2, apparently you've done something really, really wrong or something really bad happened.
Yeah. Well, we're just doing simple math here. Simple math here.
I know, but it happens. It happens in the real world. I mean, all kinds of changes happen. But you're right. If you're not updating that projected cost, you can't accurately receive the WIP. The WIP's not going to be accurate. So again, what we focus is on once a week updating our job cost reports, actual versus estimate, so we know where that is. Once a month, you should be going through that and updating the projected cost. What's changed? You might have received a change order of X, Y, or Z. You might not have received a change order from your subcontractor. Make sure those are reflected. Make sure that your back office that's managing this WIP report knows what's going on. A lot of contractors live with this stuff in their head, and that's great. And I totally understand that, but you got to get it out. You got to understand where it's going to go. Window package we talked about. We're talking about a bunch about that. Went from $1 million to 1.5. They live on the coast. They decided to add impact glass as opposed to just standard glass. That's got a big change on the project. If you're not capturing that, you're going to lose out on receiving that revenue, which again, last time I checked, the whole reason we're doing any of this building and doing headaches for custom home builders is to make money. So you should receive that money as soon as you can, receive it as income.
Well, and even on like the point of like, why are we all here? Like even just with a basic thing, like when you talk to builders that have been doing this for so many years and they're like, I've made a hell of a living at this. I've been in business for 25 years. I even, it really boils down to the nuances and the specificity that you follow as a business owner. That really, are you a hobbyist that you're monetizing your hobby on? Or are we actually being calculated business owners, taking all of these principles into consideration? And again, even from the sake of like educating the crew, is like, it's not about, are we making enough money? It's, are we making what we should be? And are we tracking all this the way that we should be?
100%.
Absolutely. Yep. And I find so many builders that get wrapped up in the top number. I want to do $30 million. I want to do 10. Mm-hmm. What I try to get my builders to really focus is on, what do you want to make? What do we want to make? And if you focus on that, then we reverse engineer the math to figure out that top number.
Love it.
Yeah, that's an important point. Can you talk a little bit about how you actually approach that, Zach? Reverse engineering from profit rather than just talking about volume?
Sure. Our biggest components that we're going to look at historical data for a client. We're going to see what is their gross profit percentage and what's their net profit percentage, right? As we find guys that want to grow, and look, growing is painful at times, and those percentages usually decrease. But what we're trying to do is understand, Mr. Builder, what is your total goal? What's your goal in the end of this? Is it you want to make $1 million? That's awesome. Well, if we make $1 million at our current ratios, this is what you have to do. If you want to make $1 million at more growth, more production, then of course those numbers are going to shrink. So we really look at our gross profit percentage and our net profit percentage and try to apply those to see where we can actually go.
Yep. And when you talk about gross profit versus net profit, you're talking about gross profit is profit on projects, and then net profit is after overhead. Is that how you're defining those?
That's correct.
Okay, cool. Yeah, I mean, we talked about the two pieces of WIP being IRS. Who cares about the IRS? I'm just kidding. We should care about the IRS.
We love the IRS.
Cash flow, which obviously is the primary piece of WIP. But the third thing is, if you're tracking these basic components, then you can always get a sense of what's my projected gross profit or what's my projected profit on this job, right? You can also get that from a WIP report. Correct, Zach?
That's correct. You can also, we can take it a step further, which we do for our clients. We show them what their overhead allocation per job is based on the WIP. Again, this is little more high level, but what we do is we take our percentage of overhead and we take the percentage of what you where your WIP is, and we apply the overhead to each job, so you see your true profit for each project. Again, a little more high level, probably more than what we want to look at, but it's another great tool for your WIP reporting to show you who you need to hire, who you don't need to hire, what you need to do to make your jobs as profitable as possible.
Got it. Okay, great. Okay, so we've covered the three main benefits of a WIP report. I'm glad we got to the profit piece. I do think we should just explain really quickly what actually happens. We've talked about adjusting things for the IRS on the income statement. So in that example you gave earlier, Zach, say you have earned $375,000 on a project, but you've billed for $500,000. What adjustment do you need to make to your income statement to account for that?
Great question. So what we're going to do at the end of every month, again, this is super entertaining stuff that everybody loves to dive into. We're going to create a journal entry, right, on your financials, and we're going to take the $375,000. We're going to put it towards income on your profit and loss statement. We're going to keep that $125,000, and that's going to sit on your balance sheet, right? So that 125 grand is just going to sit there. You've got the money; it's sitting in the bank, which is great, but we're not reporting the income, which is super important for lots of different reasons. You don't ever report income that you actually haven't earned. So we're going to take that, we're going to put it on the balance sheet. It's going to live there until the next month when we do our WIP all over again and we figure out where we're going to go. So next month, if we're in a good spot, we're going to move that 125 grand over because now maybe we've earned it. We're going to put that back on our income statement. So it's always an adjusting journal entry at the beginning of every month to reevaluate where we are. We do this every single month for our clients to make sure that their financials are accurate. Big thing, again, what we love to focus in on: job cost every single week, monthly financials once a month.
Yep. Okay, great. 100%. So basically, if you weren't working with Zach and you're just using QuickBooks, say, and you used QuickBooks to create a $500,000 invoice, your income statement would say you've made $500,000 in this month, right? Because you created an invoice, you sent it over to the income statement. What you basically need to do is subtract $125,000 from the income statement, move it to the balance sheet.
Got it. Okay, when we talk balance sheet, we're talking what is it? Assets, liabilities minus what is it? Equity? Isn't equity in there?
Zach, why don't you give a little balance sheet overview?
Yeah,
it is, but it's mainly assets minus liabilities, right? So equities does sit in there, but the main focus is, these are the assets I have. This is the liabilities I have. Here's my equity. What at the end of the day is actually mine, and what is the end of the day is I owe people. And it's a big thing. It's a big component. What I really like to tell my builders is a little snapshot, not necessarily WIP reporting, but what it does is it tells you how much money is yours. If you look at your current liabilities, your current current income, and your current assets, you add all those up, and that kind of tells you what money is yours, what money's not yours. Our favorite saying in the business is, I get a deposit for 250 grand for a house, and I can go buy a boat. No, you can't, because that's not really your money. Of course, a construction joke there, but you want to really understand that balance sheet and really understand what money is yours and what money is still owed to your client.
Well, and that's why I wanted to ask, because that's really like where the journal entry comes in. We're talking about moving stuff from P&Ls to balance sheets and earned income versus unearned income. That's really, so you're getting the half or the $250,000 draw, and you've done half of the work for it. 125 is going to sit in the liability side, but that journal entry and on the P&L is going to be 125 on the asset side and the P&L side.
Zach, do you want to explain that one?
Yeah. Over billings and under billings both live on the balance sheet. If you've overbilled somebody, right, you owe that money back to them. It's the easiest way to do it. If you've underbilled somebody, they owe you that money. So that's just kind of how I think of it. Try to keep it super simple. Balance sheets confuse everybody except high-end MBAs like Matt. You and myself, Reece, we're just average, just sons of construction workers. So that's right. That's what we do. What money's owed to me and what money's not. So
well, and that's why I wanted to ask, because really I don't think it's as much as the listener or the builder is going to be doing these journal entries. Maybe they could, I don't know, but it's even more so when they do have a conversation with Zach or with somebody like Zach, then it can at least have a little bit more context of what's actually happening with these journal entries, and why can't I go buy that boat? Right. Understanding how the cash is moving. Interesting.
Yeah. Yeah. I think the best explanation for a balance sheet is just a house, right? People talk about a house. You buy a house for $100, you get a loan for 70, right? Your assets are 100, but you owe somebody 70. Your equity is what's left over. You actually own 30 of the house. And that's a simplified balance sheet. Yeah.
That's awesome. That's perfect.
Yeah. Okay. Beautiful.
Okay. I think great discussion on WIP. We ask all our customers or all our guests. We have a lot of builder guests on the podcast to tell 2 stories. One, the most money they've ever lost on a project, and the second, the most money they've ever made on a project.
Numbers.
Why don't you do rapid fire, Zach? What's the most money you've ever seen a builder lose on a project in your experience?
600 grand.
600 grand.
That's insane.
What happened?
Yeah. Go ahead.
COVID.
Oh.
So fixed price building, right? I built a house. I'm gonna sell it for 1.8. Well, COVID comes along. Windows go up. Lumber packages through the roof. And I would say probably almost every builder has an escalation clause in their contract, even fixed price. If things beyond my control happen, then I can increase the price. Well, I have a builder that had escalation clauses in his contract. However, he sold against them. Meaning he says, I'm a fixed price builder. I'm going to charge you $1.8 million to build your house. Doesn't matter what it costs. That's what you're going to pay. COVID comes around. He pays, 600 grand to build somebody's house. Because he didn't want to change his brand. He didn't want to change what he was doing. So he was more than willing to take the loss than to change his brand and change what he sold the client. So, that's 600 grand. COVID, thanks. That's what happened in that situation.
The COVID tax. Yeah. Well, and that's what I was going to say. Like, so it sounds like this builder, like that was a very intentional decision, right? That was basically saying like, my brand's worth more than 600 grand. We'll take the loss on this one.
Yep.
What's the project that you've seen a builder lose the most money on that was just totally blindsided by it and just had no idea it was coming?
That's a good question, Reece. I'm not sure I can answer it right off the top of my head. I've seen
Does it happen
lose. Every day. Every day.
That's my point. Is like when these guys get it, how many of them are just like, well, yeah, we're gonna make a killing on this, and then all of a sudden you actually do some like accounting and some financial work, and you're like, actually, dude, like you thought you ended the year with 800 grand in cash in the bank, thinking it was yours, but the reality of it is when we actually go through these type of WIP adjustments and these types of accounting practices, you actually owe 300 grand because you're supposed to have 1.1 in cash from draw. Like, is that how often? Is that regular?
No,
I was going to say, I'm realizing now that maybe we asked the wrong question to Zach. Because of course, if you work with Zach, you never lose money.
That's right.
Right.
On a project.
Right.
We asked the wrong guy.
Hey, I inherit you. Nobody hires me because everything's perfect, right? They hire me because they usually have a problem. Something's gone awry. But it's a big thing. I've taken over clients that didn't look at their cost versus actuals till the end of the project.
Yeah.
And by then it's way too late. And that's why we do it every single week. Job cost, actual versus estimates every single week. So the problems. Lots of times my guys don't, before they come to us, they don't understand that, hey, we've lost money on our framing materials. And even though it's an allowance on a fixed price or was whatever it was, they didn't ask their client for it. Now they're 6 months into it. They feel like they can't go back and ask for it because it's already a cost that they should have addressed 5 months ago. So again, I drive it home all day. It's actual versus estimate every single week. Really look at however it makes for you to do it. Software is a great component now that really helps do that. Somebody in your office doing it, but it's the biggest thing that you can do to help avoid these large losses that folks have all the time. But Reece, you're 100% right. It happens every single day in our industry. Well, building houses for free.
And is this so, again, back to like the understanding of the estimate versus actual in real time, as opposed to once a month, quarterly, annually at the worst case scenario? That's why you do it. Is if you don't, then it's really it's a conversation you need to have with the client And if you know this on a weekly basis, and you can start getting ahead of it and preparing, ideally avoiding that conversation. But that's really what you're saying is at the end of the year, if that's when you're getting your actuals. And like, if I ask a builder, like, how do you know if like you're tracking on budget? And like, well, we know at the end of the job. It's the whole concept is you're too late to address that with the client. And that's where you take that risk on as a builder. That was a long
100%
question.
100%. Yep.
Gotcha. Yeah. Because again, I talk to builders all the time, like actuals, like whatever, I get them when I get them. And all the friction that it takes to like actually understand and track our payables and categorize our costs and get all this done. Seriously. The whole point is that like, where you do want to know this on a weekly basis so that you can avoid the tough conversations with clients and then have that emotional component of my pride's getting in the way. I'm not going to have this conversation. It'll all figure itself out, when the reality of it is it's not going to work itself out if we just bury the problem.
100%. And it's the important parts of actually job costing invoices. Talked to a guy yesterday in New York who's trying to figure some things out, and he hired a bookkeeper. And I said, let me guess, the bookkeeper just put every single invoice to cost of goods sold. He's like, how'd you know that? I said, doing this a long time. That's why you've got to have somebody in your office that knows construction, knows that, your estimate's 150 line items, and every single invoice has got to go to one line item so you know where it is. And again, look at it as often as possible, know where it is, make corrections, ask your client for the money that they owe you. Again, you can't take break even to the bank. It doesn't work. Make sure you're not building houses for free. Make sure you're not building houses with your money.
Am I monetizing a hobby, or am I a business owner?
Correct.
It's not about some years I'm heavy, some years I'm light. It was actually, Zach, when we met you at Tech Homes, that was one of the builders. He was some guy in Texas, and we started talking about budgets. He's like, budgets, what do you mean? Like, you don't track budgets? Like, that's like kind of like a fairly rudimentary component of building homes. And he's like, well, yeah, but I mean, some houses I just like really run through the roof on margin on, and others I'll lose. But then like when it all shakes out, I always make enough money, and life is good. Hobbyists monetizing their hobby, or a business owner tracking repeatable, consistent revenue and growth. It's interesting.
It's all we all get here some way, some shape, form, or fashion.
That's right. That's right. Hit him with the ringer, Matt. Hit him with the big winner, the champion.
Yeah, we're asking the right guy this question. What's the most money you've ever helped a builder make?
Yeah.
We need big
I'll just say I'll say it's 8 figure.
It's got to be huge.
Eight figures. Okay. I don't have to make it up. It's an 8 figure number.
Love it.
8 figures.
That's correct.
Wow.
And when you say make, that is gross profit, or is that net profit?
That is net profit.
Across all projects in a year is what you're talking about?
No, one project.
Oh, wow. Zach's working with some big dogs. That's what he just said.
I've been very fortunate to work in a spot where, yes, the money is, as I call it, la la land. But yes,
okay.
It's happened.
So,
what was the margin on that one?
Yeah,
was that also a super high margin?
No, it was actually a super low margin on the front end. On the back end, it became a super high margin. That's about all I'm going to say to it, just for confidentiality from my client. But it was a big deal, and yeah.
Okay, well, and so even then, so like, and confidentiality, you, Zach, but like, what, like, how, like, is that something repeatable? Like, could that client then just be like, we've cracked the code, and like, we're only going to be targeting these types of homes? Like, what was that attributed to making that type of a? All
right, so we remember how we talked about COVID being the detriment to one of my clients. For the majority of my clients, COVID was the exact opposite.
Yeah.
So in this scenario, build a house for X, sell it for X times a huge multiple, and that's how you get to that kind of profit. As we all know, the South exploded because of COVID, because we didn't have COVID like other parts of the world. I guess
it was COVID proof down there.
That's how we acted. It was just a bug. Us good old Southerners, but our markets, exploded. It really did a great job. So we had a lot of folks moving to our area, and a lot of really, really wealthy people that didn't care. They just wanted to live here. So that's really the attribute to. So no, it wasn't repeatable. It was a one-off thing. Yeah, you can make really good money selling some homes, selling some spec houses and things like that. But this was just an anomaly. So you can't sign it with me and make 8 figures on houses that you're going to build. So.
Yeah, anomaly, happenstance. Would you say any like calculation, or were they already into these contracts? And it wasn't like, oh, like COVID's happening and we can see the influx of people here, like we're going to start doing this, or was it like just true happenstance? Like they were already in the projects. They were already
true happenstance.
Yeah,
true.
Gotcha.
True happenstance.
Yeah. God, 8 figures. That's probably setting the bar pretty high. I don't know. We might have builders on here in the future, but that's got to be the top rung.
Yeah.
Are we talking 10?
I'm sure.
Are we talking 10, 12, 15? Are we talking 20, 30, 40? 8 figures ain't go a long way. Yeah. Okay.
Right.
Okay. Light 8 figures. Okay.
As I asked, as somebody this was way early in my career, and they were trying to get me to join their firm, and they told me that I can make 6 figures. And I said, well,
yeah.
Could you kind of define that a little bit? Because that's a really big range. And the lady got all offended at me. And I was like, well, $100,000 doesn't pay my bills. Sorry. And so fortunately, we went our separate ways.
Yeah.
Correct. It's slightly a bigger difference in your life. So.
Yeah, exactly.
Yeah. Reece, I thought it was extremely well said when you said, hobbyists are finding repeatable ways to make revenue, or repeatable ways to make margin.
That's the old RB special. That's been getting thrown around for years. Go ahead.
I like that one. I like that. I think though that if I'm a builder listening to these last 2 stories, I'm like, oh, well, what's repeatable about this industry? Though on the one hand, this person lost $600,000 because of COVID. Mm-hmm. On the other hand, this other guy made a ton of money because he did a spec project and the investment value went up. I think this comes back to the discussion we were having with Mark Williams about pricing models. Mm-hmm. It seems the only pricing model where you can have a repeatable margin is cost plus, right? Because cost plus removes market fluctuations from the business. If you're going to do fixed price, if you're going to do spec projects, that's the most extreme exposure to market prices changing. And then fixed price, you're exposed to, the change in supply pricing, right? Cost plus is the only one where you can truly have a repeatable margin because market price fluctuations don't affect you. Would you agree with that, Zach?
I do. The problem, this is what, a builder that's a fixed fee builder would argue with you. With a cost plus, your margin is fixed. With fixed, you have a bigger upside. But just like you said, spec, you have the largest upside and also the largest downside. Fixed, you have a bigger upside and again a larger downside. If you want to hit doubles and triples all day long, I'd be a fixed fee builder if I was building houses. I mean, I'd be a cost plus builder if I was building houses. It guarantees, like you said, my margin. Yes, it limits my upside, but it controls the downside for 100%.
Yeah. Well, and even again, I mean, I talk about this all the time. Oh, we had a little guest there. I talk about this all the time, like in how you decide it. And when I phrase it as, again, it's like the infamous, you can't plus what you don't cost, right? But that removes the most risk from the builder, right? Is being like, dude, it's going to cost what it's going to cost. I'm not going to put this in the hands of the commodity market. Like, I don't know what this thing's going to do. I'm going to make my markup and my margin. But in a fixed price builder, to your point, Zach, far more upside potential, right? Because you're going in and you're saying, I think I can build this house for this price. The price is going to be competitive. And then my game is managing that cost in the back end. Is that the difficult piece for the fixed price builders to do it? And then having that visibility time is all back in like the weekly estimates versus actuals and then even like the WIP adjustments. But in terms of the fixed price builder having kind of like that medium stance between a spec and a cost plus person, do you really have to know your numbers to be confident in a solid business owner at a fixed price builder? Or how are guys doing it in a fixed price model successfully to capture that repeatability and that upside on margin?
You've got to know the numbers. There's no doubt about that. In a fixed fee world, if you don't know your number, you're going to get eaten alive. Biggest thing is you might not get eaten alive on this project, but if you estimate the next project based on the last one that you just guessed on and you don't actually understand it, it's eventually going to catch up to you and eat you alive. So again, huge impact on knowing your numbers, knowing where you stand. During the project, after the project, it's always just a great idea because most builders don't wait to the end of a project to bid or sell the next one, right? It's a constant turning deal. So we always want them to know because every point, some part of your construction is complete, right?
Mhm.
So you should be able to use those real live numbers to help estimate your next one, especially in that fixed fee world. Reece, 100% right.
So even like you could say like when builders are choosing between, and sometimes it's like, oh, the client wants cost plus or they want a fixed price. And like, I wanted to win the job, so I had to accommodate and I wrote the contract, blah, blah, blah. But would you say like even for builders choosing exclusive pricing models and contracts, that it really could be tied down to like an emotional and like a trait thing of like fixed price guys typically do better if they're more organized, they're more on top of their stuff, they want to have access to this data. Cost plus is more for the people that are wanting to do more of like a custom project and they want to give their client options, and they can do that because they're insulating themselves knowing that it's going to cost what's going to cost. I'm just going to make my markup. Would you say that there's any validity to builders choosing their pricing models based on who they are as individuals?
I think that's 100% right. I think a lot of it goes back to risk tolerance. Go back to my wealth management days. I talked to you, and you've got a risk tolerance of this, and you talk to Matt, and he's just wanting to hit singles all day long. So the same thing happens for a builder, right? Like, you just want to make sure that the risk tolerance matches the individual. Some people don't care. They care, but they don't. They have a threshold that is different from one to one. So I think that's 100% how builders come to it. I also think that that's how builders start out, is based on their personal experience, their personal attributes. But as they build for longer and longer, I mean, go look at how many fixed fee builders were out there in 2019.
Yeah.
Go look at how many how many fixed fee builders are here today. There's a reason, right? That experience really helped make the adjustment. So you're right. Based on personal preference, personal risk tolerance, all kinds of things are why people do what they do.
Yeah. Well, and that's like Mark even talked about that, which is like he was explaining that there's really no other, call it industry or product, that you can do a cost plus model on other than like home building. Which is interesting because then you have those options to fluctuate based on the market. And then again, what keeps people from doing it is like what I hear is like cost plus does take a lot more to manage from a receivable standpoint, from an actual cost and underbilling, overbilling standpoint. Fixed price guys, yeah, you got to manage your costs a lot more, but it's a little bit more calculated. Interesting conversation nonetheless.
Very interesting conversation. Zach, I think you shared a lot of wisdom on the podcast. Thanks for coming on. I thought this one was great. Appreciate you coming on. We'll have you on again in a couple months here. And it's always good to hear that. It's always good to hear that Southern accent. It's a good Southern accent to wake me up on Friday. I love
Black molasses. There you go. I love it. I love it. Well, the conclusion of episode 3.
Thanks, guys.
All right. Thanks, Zach.
Thanks, Zach. Thank you for joining Builders, Budgets, and Beers.